Morning. How you doing?
Good, mate. How you going?
Yeah, not too bad. A bit cooler, but not too bad.
Yeah, excellent. Another very interesting week in markets. Yeah, lots of things going on.
Up and down like a yo-yo. I think we got a bit carried away yesterday and thinking it was all over. And I think there's a realization coming that there's a thumping great big hole in the supply chain behind it eventually. So, yeah, I was a bit surprised that we jumped as far as we did yesterday.
Yeah, especially when this so-called agreement or peace agreement thing sounds like it's a one-page memo.
Yeah.
Yeah, a lot of very badly worded sort of comments from the US, which give the market hope, and obviously it's not quite there.
Yeah, eventually the market will stop believing it all and just start doing its own thing. But I'm
Yes.
not sure when that'll be. But some interesting moves this morning as well. Macquarie's I thought his result was incredible.
Phenomenal numbers. I mean, the share price has already had a really big move prior to the report, but yeah, very, very big numbers, lifting the dividend, going from strength to strength, their business.
Yeah, no, it's pretty amazing. There's some other pretty solid moves yesterday as well, and I think the gold stocks have hung on okay this morning. They're down a little bit, but they had pretty solid moves yesterday.
Yeah, yeah. Certainly, we saw very strong moves in resources as well. If you look at Fortescue, I think it's traded from, I think on Wednesday morning, it was sitting around $20.05 and it hit about 21.30, I think, yesterday afternoon. So big moves there. And another one that I was really surprised by, CBA, about 20 minutes after the rate announcement on Tuesday, was sitting at just under $170 a share. And it closed yesterday at 180. And it has fallen back a little bit this morning, but it just shows that the market gets pretty desperate for some of these major blue chips when they feel there's a bullish sort of move happening.
Yeah, I mean, there's also some interesting numbers out yesterday on the trade balance. I don't know if you followed them or not, but we were down five billion dollars or something, and that was like a $6 million spread move. And it
Yep.
was mainly due to two things. One, increase in petrochemical stuff coming into Australia and the price increase that comes with it. But the second one, by far the biggest one, was IT equipment for data centers. So that's
Wow.
an
Okay.
incredible amount of money being spent. We knew they were happening, but it's sort of coming through now. So two things there. One, those petrol stuff will flow through to inflation. But the second one is I'd be watching those guys that do the construction stuff for the data centers because their inventory is building up or they're buying materials for them. So they're all go.
Yeah. Wow. Okay. Interesting concept there to look at.
Hmm. I've only had one trade today. I don't think I'll put the slides up for it. I mean, Fortescue was up pretty well yesterday as well. It's pretty much at its price targets. Materials and iron ore, pretty much subject to what's happening in China. And I think I priced up the 23.01 yesterday, which was about $1 out of the money. And
Yep.
you're going to get about a 30-cent premium on that if you're selling calls. So that was one I looked at. I think it's down a little bit this morning. You might have to adjust that strike, but if you're looking at about a dollar away from where the money is, I think given it's at its price target, you could look to sell a call there. And if you got exercised at about 23.30, 23.40 or something like that, I don't think you'd be too upset. And you could certainly buy back in on a pullback further down the track.
Yeah. Look, I think it's a great idea. I've got a client that I'm going to sell some Fortescue calls for shortly. We're probably going to sell 2150s for the 21st of May.
Yeah.
We bought the stock just under $20. So if we can pull $1.50 out in basically 3 weeks, we bought the stock last week,
Yeah. Wow.
actually Friday of last week. So if we can pull $1.50 out roughly and the 30 cents a premium, we'll be pretty happy over a 3 week period. So
Yeah, that's a
definitely
great
one
deal.
I'm looking at for a trade. Well, I've got the trade to do once we've finished our video.
Yeah.
Couple other things I think worth sort of talking about. Obviously, we're now through reporting season. We for the banks. I've got a few ex dividends. Westpac's down pretty heavily today. It's probably one that could look be interesting if someone did want to try and pick the stock up. It's sub $38 at the moment, so at that sort of price, it probably starts to get a little bit attractive. I wouldn't say it's a screaming buy, but yeah, starts to look a bit interesting. And the other thing, Gav, I wanted to sort of just talk about is, while we don't really know what's going on in the Middle East, and it sounds like the conflict's reignited a bit this morning, if we do start to look at oil prices easing over the next sort of 3 to 6 months, I thought it'd be worth looking at a couple of stocks that will benefit from that and would be worth obviously looking at acquiring while things are still a bit tense. So the three that I came up with, well, there's a couple actually, a couple of others, but Qantas was one. Obviously, airlines fuel costs are a huge component of their running costs. They do a lot of hedging, but um, certainly a pullback in oil prices would be very positive. So Qantas, I think, is a great one. Transurban, one I thought would be a bit interesting. As fuel prices ease, obviously traffic flow tends to pick back up on toll roads and the like. So I thought Transurban would be a good one to consider. Um, Wesfarmers, I thought also with lower oil prices, lower fuel prices, consumer spending, a stock like Wesfarmers with the Bunnings Group and the like would certainly expect to see a bit of cash flow back over with their business there. And then you could look at, I suppose, a couple of the energy or the big resource companies that would really see just a benefit to reduce running costs if we do
Yeah,
get oil and or diesel at much lower levels.
yeah.
So BHP Rio, probably Fortescue would be natural ones that'll benefit from that. So just a couple of things to think about if we want to start looking a little bit longer dated.
It's funny you mentioned that. I had a look at the Qantas chart this morning. I mean, it was up a fair bit yesterday, and it's down 1% or so this morning. I mean, you could certainly look to do something there. They're either pick up the stock, or I don't know what the premium would be, but given the volatility, you might be able to sell some puts underneath that. But it's certainly the one that'll jump the hardest if things start easing off.
Yeah, I think that's a good play. Yeah, on a decent down moving Qantas, maybe write some puts on the basis that in 6 or 8 months' time, we're assuming things are sorted and the oil price is possibly back under 90, even maybe under $80 a barrel. Qantas's numbers improve massively
Yeah.
there, and also people probably start flying again too.
Yeah, I mean,
Um,
if you look 12 months out, you mean buying the stock, you're going to be hanging on to it for about 12 months. So if you look 12 months out, surely things have moved quite a bit since then. So
yeah,
you've got a broad portfolio, adding that to it's probably not a bad one.
very good idea.
Yeah.
All right, mate. Well, that's probably
Okay.
covering a bit for today.
Good one. Have a great weekend. I'll talk to you next week.
You, you do. Thanks, mate.
Yeah.
Bye.
Bye.